Good morning, everybody. 8:10 a.m. It's May 29th. Welcome to my channel. Now, this market every friggin' day is nuts. Nuts, nuts, nuts. Can't get any more nuts than this market. All right? Now, yesterday, the market was a friggin' barcode, right? Barcode. And then FOMC minutes came out, which was like a nothing burger, right? Then the market pushes up, then sells off, right? So you got a close lower in the market. Then all of a sudden you get the court, US Trade Court, saying that these tariffs, global tariffs, are illegal. Illegal. The market starts to rip higher and gap up. Now, Bessent's talking right now saying that this is going to be overturned. They're going to appeal it. Trade deals are still going to be made. And the move is basically erased now. You can't get any more nuts than this, okay? All of this happening after the close. So ripped up. Now it's taking that back. Okay, we'll get into the levels of why this is significant. We are in ultimate balance, okay, in both markets. Ultimate balance, big moves happen, okay? Now, this could be looked at as a breakout. And if we slip below ultimate balance, that is a huge sell-off could happen. Okay, that would be called a look above and fail. Right? We'll get into all that later. All right. Now, without further ado, let's get into the Nvidia. And it's almost like Nvidia reported earnings didn't even friggin' matter, even though they beat. But with I think it's an 8 billion chip curb hurting business. It was better than expected, which was still like a loss. So the market was like, oh, it's not as bad as we thought, which pushed Nvidia up. And then this whole court block, ripped the market higher, but now that's going away. But Nvidia is still staying up. Okay. Now, welcome to my channel. My name is Steven Gonzalez. I use market profile to find structure in the market, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. Helps me find structure in the market. That is my edge, okay? Also use anchor view ops. Lets me know who's in control as well, right? The beauty of those things, most traded price, it isn't like perception. It's not a moving average. Remember, moving averages are lagging. It's telling me where traders are trading the most, right? In those areas is an agreement on price. And then price can trend away from those areas. Okay? Those are little walls, little magnets, and markets like to chill there until they move. Okay? Now my internals are my bread and butter. All right, market internals. They let me know the possibilities of the market, the expectations I have every day from the market. Now yesterday, I wasn't in love with the market. The market was giving mixed signals. Um, it wasn't weak, it wasn't strong in the beginning. Then it kind of got weak. But that yet tech was like not that. It wasn't a high conviction market for me yesterday. Had a couple trades, a couple things I cut. I had actually a short later in the session that worked, but like still, I only used half risk. And I got to make a rule for myself analyzing this. Anytime I'm kind of like, I don't really like, it's either no trade or I'm just going to cut my risk down. Because then it just doesn't make sense. I know this is not the market that I like to trade, right? So it's either cut risk down when I think there's a little bit of an edge or just you don't trade it. Okay? Now, hopefully, You guys can join me every morning. Okay, give you the market story, market news, economic calendar, the leaders and laggards. Okay, give you the daily charts. And we go over that 1 hour, specific 1 hour ES future charts. If you don't watch anything else, watch that. All right, watch those charts. And then we do long and short trade scenarios in the ES and the NASDAQ futures. Okay, once the market opens, it's a whole different thing. That's where you can come join me on my Discord. Okay, Confluence Trading. Go to my YouTube homepage, join the link. I've been going live the last couple days. All right, so join me. I'll give you my thoughts on the market and what I'm seeing. And I'm generally never really wrong on how I'm reading the market. That doesn't mean that I'm a multimillionaire because I can read the market like that. It just means that I pretty much know where the market's going to go, but it doesn't mean that I can always construct a good trade setup from it. Remember, trade setup and reading the market are two different things. Executing, all that stuff is so different. Okay? Now, with that being said, let's get right into futures. Okay? Let's look at these together. Let's look at these levels. Who's leading that market? Ethereum. Up 3.64, Bitcoin's up 1.65, silver's up 1.27, Nasdaq's up 1.26, silver up 1.24, Russell up 0.81, ES up 0.77, 10-year yields up 0.54, crude up 0.44, gold up 0.31, Dow's up 0.20, VIX just pushed down to, it's pretty much flat, okay? Dollar's flat, 30-year bonds being sold slightly down 0.22. Move on to the Max 7 Plus here. Oop, sorry about that. Hold on a second. All right. Now your leaders NVIDIA. All right, at 142 right now. 142. They closed at 134 yesterday. Up 5.30%. Broadcom up 2.66. So semi's getting love today. And I actually saw the court said that curb chips, I think, goes against a trade agreement. So they're trying to block that as well. So if that does hold up, it's just crazy. Friggin' nuts. AMD up 2.38. Apple's up 2.06. Tesla's up 2%. Coinbase up 1.66. Everything's getting a lot of love. Okay, but remember what I just told you. The market has definitely pulled back. All right, Amazon up 1.55. Google's up 1.04. Meta's up 0.87. Microsoft up 0.63. GE up 0.34. Eli Lilly up 0.22. Boeing's up 0.05. Basically flat. JP Morgan flat. Berkshire Hathaway flat. The little laggard is Netflix, which really isn't much of a laggard. Right? Really isn't much of a laggard. All right. Moving on. We're going to move on to sectors, the guts of the market. Okay. Go to our indicator, which is risk on, risk off. Semiconductors up 2.40%. That means the risk is on. Technology up 1.43%. Discretionary up 0.75. Energy up 0.31. Basic materials up 0.05. Communications up 0.03. It's not really much. Only little lagger is staples, which is only slightly down. So nothing's really down that much. But remember, we just had a huge move up, and has been going down. It's pretty much gone, this big move. In the ES, it's pretty much gone. The whole big move taken is taken back. And NASDAQ hasn't fully taken back the whole move yet. And the NASDAQ has broken that big resistance. Okay. ES, pretty much, we'll get into it. All right. That's your sectors. All right. Let's go on to the economic calendar. We do have some things popping off today. All right. Sometimes they move the market, sometimes they don't. Today is GDP. GDP consensus negative 0.3, previous 2.4. All right, let's see what that happens here. Fed Barkin speaking at 8:30. Okay, initial jobless claims, that really hasn't moved the market much lately. 10 a.m. you got pending home sales. Okay, so let's see. Fed Goolsby speaking at 10:40. I wish that could be a better time than he's speaking at 10:40. Crude inventory is 12 p.m. Then you got a bunch of Fed speak today. Bunch of Fed speak. Tomorrow's core PCE. All right. Back to earnings. Let's see if there's anything. We know we have Nvidia, right? Nvidia after the close. Salesforce. Actually, Salesforce right now is down 1%. All right. Now let's look at this. Viva, they beat Sentinel One. I don't know exactly what they did. We can see it in a little bit. Let's see. Today, before the open, Foot Locker, Best Buy, more retail, Kohl's, Hormel Foods, Burlington. Okay. After the close today, Marvel, Semis, Costco. Okay, Dell, Ulta Beauty, Gap, a lot of retails. American Eagle, NetApp. All right, that's probably going to do it for that. Moving on to some news. Now, the big news, obviously, is that news of this. Let's just go over this first. It says U.S. ruling that Trump tariffs are unlawful stirs relief and uncertainty. U.S. Trade Court ruling that blocked most of President Donald Trump's tariffs, and he found he had overstepped his authority, triggered some relief on financial markets while adding to the uncertainties weighing on the global economy. U.S. curb chips design software, chemicals, other shipments to China. The United States has ordered a broad swath of companies to stop shipping goods to China without a license and revoke licenses already granted to certain suppliers, said three familiar people with the matter. NVIDIA discloses more China risk, but CEO praises Trump. Even as NVIDIA reported another blockbuster quarter of 69% sales growth on Wednesday, the maker of artificial intelligence chips warned of more risks to the business emerging in a technology conflict between the U.S. and China. Okay, Musk says Tesla's testing driverless Model Y cars in Austin, aiming June delivery. Tesla has been testing driverless Model Y cars in Austin, Texas, and that must be a typo, and aims to deliver the first unit in June, CEO Elon Musk said on Tuesday. And I did see Elon Musk is leaving the government. He is not liking this new bill. Also from Trump, he says all the work he's done in Doge pretty much is pointless. So that's pretty interesting, right? Salesforce raises annual results forecast on strong cloud spending, but they are down this morning. They are down. Okay. Let's look at some of the things overseas. Wall Street futures and the dollar rose as markets across the globe got a major boost as the U.S. federal court blocked President Donald Trump's so-called Liberation Day tariffs from going into effect. Although the White House quickly appealed the decision, but the relief spread sheer in Europe and Asia too. European stock rose, but persistent trade uncertainties kept overall gains in check. Japan's Nikkei ended the trade at the highest point in more than 2 weeks. Oil prices were also higher, climbing over 1%, with investors eyeing OPEC Plus July output decision, potential new sanctions on Russia by the U.S. The easing trade tensions dented demand for safe haven gold. On the economic calendar, investors will watch out for the second estimate of first quarter GDP, preliminary PCE prices, and weekly jobless claims data. All right, let's see if anything else is in here because then we're going to move on. So Sentinel One here. The company trimmed its annual revenue forecast on Wednesday, signaling cautious spending. Okay. What else here? Already talked about that. All right. Let's see. Abercrombie and Fitch, Barclay raises target price 84 from 71. Nvidia, Piper Singh raises target price to 180 from 150. Salesforce Bard cuts target price to 365 from 400 to Salesforce. Okay, that's that. Now we move over to here. Nvidia, we talked about. Tesla stock rose 2.2 after Elon Musk confirmed he was leaving his role in the Trump administration, ensuring he can focus his energies on running the electric vehicle giant. See, that's what I was talking about before. Kohl's stock gained 3.7 after the department store chain reported a smaller quarterly loss than its previous forecast. Best Buy stock fell 2.1 after the retailer slashed its outlook for fiscal 2026. Okay, Salesforce I just talked about. Here's AI. Stock soared 13% after Enterprise Artificial Intelligence Software Company reported a better than expected quarterly financial report. Fort Locker fell 0.1 after the footwear retailer reported its first quarter earnings. Burlington Stores gained 8.8 after the retailer reported first quarter earnings that surpassed expectations. Hormel Food stock fell 0.6 after the food processing company reported second quarter earnings that met expectations. Let's see, JetBlue Airways stock rose 4.6 and United Airlines stock gained 2.3 after two carriers unveiled plans for consumer collaboration that allows travelers to book flights on both carriers' websites while interchangeably earning and using points. Wow, interesting. Interesting there. All right. Juice, let's see what the juice got. Now, Besson was just talking. All right. I don't really see anything here. Now, remember, we got news dropping in about 6 minutes. I'm not really going to pay attention too much to it. I think we can move on here. I don't think there's anything else I want to talk about. Let's get into the daily charts here. Ready? Ready? Here's our lovely SPY. All right. So Let's look at this together. Yesterday, opened here. Now, if you were live with me, I would have told you I'm calling those bluffs on those bulls. And I almost regret not maybe thinking short there because internals were not strong. But because we were pushing higher and I was looking for the pullback, which is fine. But we wound up, closing on close to the lows, right? But that didn't matter because we are up to 592.50 right now. We are right at yesterday's highs. Okay, right now. Yesterday's highs. Now, you can see the resistance here. This is last week's highs. That's 595.54. Those are the weeks before that highs. So this is a very key resistance area for the market. We've tried to break it 3 times here. I think we came up here. I think we broke it in the overnight hours. And we're going to look right at futures now to see a better view of the price action, okay? Look at that. So in futures, look at that last week's high. It came there. Boom. Got a nice wick here, right? You see what I mean? See how we're right at yesterday's highs? So came up here to that resistance. 5993.50 is last week's highs. Couldn't sustain up there. Now, look at the buying. Lower high, lower high, lower high, right? Came up here. If this starts to come back, we're probably going to go down and test these lows, which is also last month's highs. Okay? We'll get into that in the futures in a second. Okay? QQQ. All right. Look at the beautiful inverse head and shoulders here, setting up in the Qs. This resistance is a monster. 522, 523, monster resistance. Came up there yesterday. Came up there. Couldn't hold it. Kind of closed here, right? Pretty much closed in the middle of the previous day's session, right? But right now, we're at 526. Look at that. This is where we are now. We were a lot higher. Okay, 526. So you are gapping up. So this is what you would consider an exhaustion gap because you have so much resistance, right? And now you're up here. Anybody who's short is underwater this morning. Okay, so it'll be very interesting how this market handles this news. All right, now let's look at the futures. Look at that big wick. You were all the way up. Let's get the high. High was 218.58.75. Okay, right up there. You got a nice wick, right? But still gapping up over this resistance level. Okay. You can see that you do have this inverse head and shoulders forming. I mean, this would have been the neckline. You broke it. Okay. Do you continue higher? Okay. This is a very, like I said, powerful gap when you gap up this much. I mean, we did get a wick. So we just have to see. Okay. We just have to see. Now, moving on to our triple-headed monster here. That's your dollar, your VIX, and your 10-year yield. That 10-year yield's been pesky. It is a pesky little thing, okay? So we're playing around with that 2025 anchored VWAP here. Push down where? Right to last week's lows. Price is right here, 4.499 right now. Okay. So we have to see what happens with this bond market. It's kind of crazy. Okay, you do have a head and shoulders actually here. Neckline would be around 444, 4.4 yield. You break that, you probably go down here. At least test the 2024 anchor view. We'll have to see. There's really a lot of indecision in the bond market. All right, moving on to the dollar. This dollar, look at that move. Wow. Wow, 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 wow. So that dollar All right, GDP just came out. Came out negative zero point 0.2. It's not really doing anything to the markets. All right, so look at the dollar. The dollar opened here and wow, it's right here right now. So it had a nice bullish move up and just got taken back. Oof. Interesting. All right. Moving on to that VIX. That VIX, let's see here. You notice how this VIX opened down here, which was because of that big push up, and now it's getting some love at a 19 VIX. Okay, a 19 VIX. Who knows what we have in store. Now, one thing I have to note here, this P call, let's put it up there. P call is put to call ratio. Let's come on now. That is ticker $ P call. All right, and if you put this on a chart, okay, so basically the higher these candles go, that's the market really, really buying puts and hedging. Okay, the lower you go is people are buying calls. Right now, I keep getting this alert because we keep bypassing almost down to this 0.46 level, which really kind of means the market's complacent. The market's probably due for some type of pullback because the call buying is so strong, and there's nobody wanting to buy puts. Nobody's scared. Nobody's hedging. Okay, so I'm just watching that. I keep getting alerts saying a market reversal is on hand, but this market's very hard to read with all this headline risk. Okay, but we're very frothy with call buying and not put any put buying. Okay, just wanted to show you guys that. That wraps up our triple headed monster. Now we're going to go to that, like I said, a real important charts that I have to talk to you about is the 1 hour charts. All right, with my volume profile. All right, we can look at all the good stuff here. And let's do that. Let me get my marker out. Alrighty. All right, so this market's nuts. All right, so this is ultimate balance. Okay, most traded price of the month is here, 59.08. Most traded price of the week is here. I think it's around 59.26. Put them together basically. Okay, so big moves happen from ultimate balance. Okay, ultimate balance. That's why you got this. Okay, that's why you got that big move. Ultimate balance. Everybody's agreeing upon these prices, right? And then you move away, it's going to have a big move. Now, it's all about, can we hold this? Now, this is the key now, right? I've been saying this all week. We have to accept value, find acceptance above this level. Then it's bullish, because then if you hold it, you start to make swing lows, you can start to move higher. Okay? This is where I was talking about. Now, if from this area, an ultimate balance, if you go like this and start to make your way back, we're going to make a big move. Okay? And what happens is this area, it's called a measured move, right? If you break this area, you usually move double the width here, which brings us down to like at least here. So I'm going to be on watch for that. So this is all I care about. You hold this level today, it's bullish. You take it out and start to hold, it's bearish. That's the structure when I talk about the structure. Okay? The structure. Now, what I did here, anchored VWAPs, right? So I put, if you notice here, the US China trade deal, this is anchored VWAP. Look at that support right there in the market, right? So I put an anchored VWAP right at this low. That so far buyers have been put underwater. Okay? Now, I put an anchored VWAP on this, the highs of this selling here. Okay, the highs basically. This is that blue line. I'm going to be watching that blue line because that means selling from here. If, like, let's say the VWAP comes down to here and the market, it's like goes like this, and the market does that, well, now these sellers are underwater. The average seller is underwater. Okay, that is your ES. Okay, well, let's move on. Now, also, I don't want to discount this. You do have a high volume node here that also cause. Remember, I say high volume nodes. This is a composite high volume node, are like walls and magnets. So magnet meaning you go from this high volume node to this magnet wall, stops the price in its tracks, and now look, we're going back. Okay, that's how that works. Let's move on to the NASDAQ here. And we'll show you some important levels too in the NASDAQ. Okay, we could probably even expand this now. Okay, here's your NASDAQ, right? Ultimate balance 214.35. Okay, ultimate balance right here. Look at this friggin' level. This is that exhaustion gap. All right, look at this. This is last week's high and low. That's the other previous week before that high and low. This has been resistance multiple times. I said you needed to get over this level and find acceptance in order for the NASDAQ to move higher. Okay, notice NASDAQ is relatively stronger in structure than the ES or the SPY. Okay, it broke out this level. It's gapped up above this level. Here's last week's highs right there. Of course, this could be a pullback buy if you get here. Okay. Again though, what do we do if we go back to this level, right? And the market does that and then finds acceptance below it. Ooh, boy. That is not going to be good for this market. And we could rip down all the way down to 207, which is the most traded price of the year. Okay. Now, as far as anchor VWAPs, let's check it out. I put an anchor VWAP right from this low. You can see buyers are underwater here. I put an anchored VWAP here at the highs, and so far that's in check. It's right here. So I'm going to watch that. It just tells me, and that's what I like about the anchor VWAPs. It's indisputable. It's basically tells me exactly the average buyer, right? Or you could think about an average seller from the highs. Are they underwater? Are they hurt? It's a great little indicator to have, right? And anchored VWAPs mean I can anchor it from any place on a chart. Any place. Okay? All right. That is your hourly charts. Okay, that's your hourly charts. And there's other charts I look at for volume profile. It gives you a cleaner view a little bit maybe. So that is your hourly charts. I am going to switch workspaces now. Okay, I'm going to switch workspaces. And we're going to go to what exactly levels. We're going to recap yesterday. All right, let's do it. This is your market profile, your volume profile. We'll switch over to white here. Okay, let's look at our profile. Okay, this is the weekly profile. Now what I want to show you here is you have balance in this profile. You have excess to the top now. You have a value area. That's 70% of the trading has happened in this area. See the highlight blue. Then you have excess down here. That is our rolling week profile. Okay, that would say that's completed profile. So this would mean balance, equilibrium in the market. Okay, that's a completed auction. Okay, that's a normal distribution. So what this could mean right off the bat is we do this today. It's very balanced now. Okay, very balanced. Now, let's look at yesterday. Yesterday was friggin' horrendous. This tempo has been horrendous. It's just, ugh, it's horrible. Yesterday, there's a little move up where I was like, I don't believe that. And then it sold, and then it just chopped and chopped and chopped and chopped, right? I got this little move in a short later in the day, but there wasn't much to brag about, okay? And then it moved up, and then we sold off, and it closed right there. Where did it close? Right at the most traded price of the month. No shocker there, okay? Now, that's what happened yesterday. Now, what do we have going on now, right? So, we are no longer gapping up. We only have this much of single prints left. Right there. It's taken back this whole move. Okay, this is a very important level right here. It's the midpoint of the overnight, 59.49. That is your 50% retracement of the overnight, and we are now below it. We're back inside yesterday's range. Okay, back inside yesterday's range. Look at all, which were mostly buyers up in this profile. Look at all the volume that was up there. Those were buyers. Okay, they are getting liquidated right now. And you're going to go back to good old value, good old home, where everybody agrees upon price. Okay? You don't want to see the market down here if you're a bull. You really don't want to see it move down. Okay? So, let's look at some levels here. All right, we're gonna mark off levels. We have our 50% retracement. Kind of lines up with yesterday's highs, okay? We're going to put that level right there. Now, ultimate balance we have, okay? Ultimate balance is this big area. What we have down here is your most traded price of the most traded price of the month, 59.08. I'm going to put a little box because you have a confluence low here around 58.90 is the overnight low. That is your last defense for bulls. Okay? That is your last defense. So this market's tricky. It is tricky because the ES is weaker, the Nasdaq is stronger, the Nasdaq is still above that big resistance that it broke, and now ES is back into range. Okay, right off the bat, I'm going to tell you this. If the Nasdaq and tech stocks are strong off the open and the rest of the market is weak, I'm most probably going to be looking to long QQQ. Okay. Now, next major level. 58.62. We're going to, right here, this demand zone, basically. Okay. The market would have to be, what I'm going to say this. If we were down here, and I would say the market opens up and it's not that weak, we come down here, I would want to be long. But see how much we're up here? So if we find ourselves down here, the market's going to be weak. So I'm not a biggest fan of getting along in there. There is demand right here. You can't see it. There is demand right here. So those are points that I'm going to be looking at as well. Okay, let me put a little thing around the most traded price of the week in this demand. I'm sorry. I wanted to put that as well. Okay. So it's tricky. Very tricky. Okay, we do have a supply zone up here. And a lot of overhead supply in the markets. Look, this is last week's highs. last week's highs. Okay, market tried to go above them and could not. And now we're back into range, right? So we're going to do scenarios now. Let me break this out. Okay, there's our overnight session. Remember, market profile is only 30-minute bars. That's all it is. All right, let's start. Okay, now ES. All right, we're inside yesterday's range. Okay, there's the gap fill 59.52. So we're no longer gapping up. Okay, you do have this. This was single prints at one point. Okay, it's got taken out. Okay, this emotional buying has been taken out. However, we have this level here. Okay, this level here. It's kind of like this breakout point here at 59.40. You have demand zone here. So this level and the 50% retracement of this move, I want to see what we do in this area right here. If we pull back into this area, into this demand zone, and this most traded price of the week, which 59.26, I'm sorry, 59.26, I think I said 59.06 before, it's 59.26. If this holds and we start to do lower highs and the market's not that weak, well, here's your liquidity to take out, right? You can just take out this and start working yourself up and see if you can break these highs. I don't know if that's much in the cards. I really don't know. There could be more news that comes out today later on. I don't know. This is just a crazy time because now it's like they're appealing great, but it just got blocked. So we don't know what's going to happen in the future. So, like I said, this could happen. I don't know. Now, once you get into this area here, I'm not a fan. We will chop in here. Now, there's a caveat. If we don't chop, we could find ourselves this way. And if we don't chop through this, that's a sign that the market's weak. And you're going to start to rip. Okay? You're going to rip. Next area is here. Like I said, this could be supportive. Okay? This could be. I wouldn't be probably interested in longs here just because if we go from here to here, that means the market's weak. Doesn't mean you can't make money. Okay? We could bounce from here. I have to put it in the cards and you go back to balance. I'm not a fan of that, but I have to put it in there. Now, going to the bear side. Okay? Here we go. Price is here, right? Right there. 59.48. Okay? This is where it gets a little tricky. Okay? What I would want to see is a quick move up into this supply. And I would like to see internals that are not very strong, like yesterday. And I want to see what we do in this area. It should have resistance here. If we do a lower high, and then if we start coming through, well, all this liquidity will be taken out. And what I would say is get ready to take some profits in this ultimate balance area. Now remember, if you hold some on and this market starts to rip and you rip through this area, which would be considered very bearish, like this, that means all longs are starting to go, uh-oh. And then you just push, okay? You come to this level. Now, if you come all the way from here to here, I would suspect a little bounce. But if it finds acceptance, you got single prints in this area. You can rip down, go right to 58.20, which happens to be the most traded price of the rolling year. Below that is, whoa. I don't know if that's in the cards, okay? But that's what I'm going to be looking for. The other thing is, let's just say the market opens and you start to rip through here, right? I would like to see acceptance here, and then maybe I would think short to take profits here, and then to see if you get any more gravy on top of that. Okay, that's what I'm looking at for ES. All right, that's your ES. Moving on to the NASDAQ. Moving on to the NASDAQ. Okay. You can just see how different the NASDAQ is. It is gapping up. It's not even inside yesterday's range like the ES. Already, I don't like it. I want to see markets connected, in sync. I don't want to see markets out of sync. Okay. So, let's look at this together. Now, we have ultimate balance in this area. Let's call it 214. Ultimate balance, okay? You had multiple resistance that failed all along these lines. You can see right here is last week's highs. Price is currently above it. Okay. You are still have single prints here from this emotional move. The emotional move. Okay. This is an exhaustion gap. You you went above a huge resistance and you have price accepting above it. Now, granted, you were up this high. Okay. Now, let's mark it off. Let's see the difference, right? Here's your 50% retracement of this move, 21589. I'm going to draw the line right here. What else is that? What am I going to draw that line is? It's the breakout level. And you have a demand zone right here. Okay? That is a level. Everyone's going to be watching. Everyone's going to be watching that level. 50% retrace. Whoever does Fibonacci's, they're going to go, ooh, that's 50%. Whoever says, ooh, this is a pullback to test the breakout level, there you go. If you go, ooh, this is a gap fill, right? Gap fill happens to be right at last week's highs. There you go. And if that tech market is pretty strong on a pullback, oh boy, that's a nice pullback long. Okay. Now, if we lose this little area here, no bueno good. No good. All right, you got your little level here as well. That's demand. Okay. You have a supply zone up here. Okay. So look, the market's still pushing up. So we're going to get into scenarios here. And like I said, this is relatively stronger. Relatively stronger. All right. Let's do it. Let's do the NASDAQ scenarios. We will start with the bull side. All right, here we go. So let me erase that. Let me erase this. Boop, boop, boop. Okay. So we got our single prints. You can see the white. That's single prints, emotional buying. You can see that caused. It's been supportive. That is bullish. That is bullish. Okay. Now, price is here. For me, for myself, I would like to see a little whoop and then, okay, let's get a corrective activity. Pull right into these singles, pull right into this demand, pull right into last week's highs, pull right into the gap fill, like I just said all before, 50% retracement, and see what we do. Okay, let's see what we do. All right, I'd have to really watch closely. If you get some higher lows, you could start making your way. And if this selling comes in, right, you're going to rip those out. And you're going to continue to take out this liquidity here. And you're going to test the supply zone here. I expect to get some resistance. If you break that, you can go up to 219. I do not know if that's going to happen. Okay. That is a scenario. Okay. Then what I would say as well, you could go deeper into this demand zone and to your, like most trader price and ultimate balance, you could also get support there and go up higher. Honestly, probably all I'm be interested in, because if you go below ultimate balance and you're here, you're going to have to work through this and it's not going to be easy. Okay. Now, bear side. Okay. So, what I would look for. Let's just say we do this, push up into this supply. Want to see what it does here. Now, if the market is not, is it's like faking that it's strong, like yesterday, and we come up here and go, whoop, lower highs, then you got the liquidity and you're going to just drop like a stone, take out these single prints, and you're going to fill the gap. I would definitely take some profits there. Okay. Here's where the rubber meets the road. If this market can rip through this area, ultimate balance, okay, that is no good. Right there around 213, you rip that out. You're going to test this area here around 212. 212, you have like a gap here. Okay. If you went from here to here, you're weak. Okay. And you can just fall. This stop would be around 210. Ridiculous selling would bring all the way back to the month of day view up to the last week's lows around 207. And 207 is the most traded price of the rolling year. Now, I'm not calling for this. I'm just saying because ultimate balance you moved up and you failed, you come back through, you genuinely will double this area. So that's what I'm saying. Okay. But it's not an easy market. They're not together. Nasdaq's gapping up. ES is back in range. They're disconnected, which makes the market do weird stuff. It's not going to be orderly. Right? But like I said, right now, if I want to go long, it's probably going to be QQQ Nasdaq, okay? Boom. That's it for today. Ooh. All right, hope everybody enjoyed that analysis. If you did, please smash the like button. That would be much appreciated. All right, and hopefully you can join me every day. Give you the market story, give you the lowdown on the markets, okay? Market news, leaders and laggards, economic calendar. Everything you need to know, prepare yourself for today. Just gave you the long and short trade scenarios. Remember, Nasdaq gapped above a key resistance level, that exhaustion gap. ES back into range, markets disconnected. Remember, we have tariffs being blocked. They're appealing. Percent says this doesn't matter. They're going to go through anyway. Who knows? It makes markets uncertain, which makes it harder to trade. Okay? Keep that all in mind. All right, now, I will most likely be live again today. This will be the third day in a row. Okay, so if you want to go join my Discord, Confluence Trading, go ahead to my YouTube homepage, click on the link, join me. I will give commentary. Okay, I will give commentary. And if not, you'll see me tomorrow in the morning. All right, everybody have a great day. Stay green. No trades.